So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decided if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless I love to analyze stocks just for you. So let's stick around and discuss some numbers now. So to analyzing the stock, I use the high growth investing strategy. It consists of 6 KPIs. For every KPI you can get 0 up to 3 points. So in total, a stock can get a maximum of 18 points, and this indicates a high growth stock. So today we're going to talk about CO-DIAGNOSTICS. I have discovered this stock some weeks ago, and I'm, to be honest, very excited about this stock. I'm here to do my best to explain why I think this stock could be a very nice opportunity for each of us. And in this video we're gonna do a pretty solid cost breakdown of all my preliminary researches and also the stock analysis, and we're gonna go over all 6 KPIs that I mentioned before. And yeah, so stick around for this entire video, because I think there could be massive opportunities in this high growth and hopefully profitable stock. So let's do it. As you can see here below, the 6 KPIs, the enterprise value divided by the sales actual, the gross margin as well, trailing 12 months, rule of 40, sales growth, and the debit ratio, and the PEG, the price earning ratio divided by the gross sales. Yeah, the maximum in share can achieve is 18 points, as I mentioned. And for CO-DIAGNOSTICS, I'm very exciting, to be honest, because they had a price growth within 1 year of 1600%, so that's quite huge. And in this entire video I will also discuss the fair value of this stock and the result of the overall high growth investing analysis for CO-DIAGNOSTICS. And I think it's really a nice chance for each of us, because we can multiply our money by investing in this nice stock, CO-DIAGNOSTICS. So currently we have a price of around about 15 US dollar. As I mentioned, we had a very nice development in terms of price. And here on the left hand side you can see the all over result of the high growth investing analysis. So we end up at 14 points out of 18, so really nice indicator that CO-DIAGNOSTICS is a high growth stock. But coming back to the enterprise value divided by the sales actual, so if we take a look into Yahoo Finance, we have 15.73, so that's unfortunately below or bigger than 12, so 0 points unfortunately. And the enterprise value is a measure of the value of a company regardless of its financing, and it could give us a nice estimation of the valuation of a fast growing but still loss making technology company. Second KPI is the gross margin trailing 12 months. So we take the sales, reduce it by the direct cost and divided it by the sales. We end up at 74%. You can also take a look into Yahoo Finance and looking after the direct costs and also the revenue, etc. And if you do so, you get 74%. That's between 75 and 65, so 2 points for this KPI. And yeah, the gross margin provides a good indicator for the profitability of a business model, and the higher the percentage, the more money a company has available for sales and marketing, research and development. So I think CO-Diagnostics has still a lot of money to do further developments of treatments, for example, for the COVID-19 and for other stuffs. So quite a nice value. So next one, the rule of 40. That's the sales growth rate trailing 12 months plus the free cash flow margin trailing 12 months. So in this case, as you can see, the sales growth rate trailing 12 months is at around about 30,000%. That's huge. So as in addition to every KPI that we saw before, also a very nice indicator that we are talking about a high growth stock. Plus minus 13%, so we end up still at around about 30,000%, and far above 50%, so 3 points for CO-Diagnostics. And the rule of 40 is a simple key figure for assessing the efficiency of a company, as you can see here, and also the quality of its business model. And yeah, I mean that makes sense. The higher the value, the better the business model of the company is, and everything above 40 is quite attractive. Here we are far above 40%. So next one, the sales growth trailing 12 months. Yeah, as I mentioned, 30,000, so above 40%. 3 additional points. Here also a screenshot of Yahoo Finance. Here we can see within the last 4 years the earnings, still negative earnings until the last 4 years, but in terms of revenue we see a pump up from 2018 up to 2019, and in this fiscal year it's quite exciting. So to be honest, I'm very excited about the stock. Because this week they will also provide us the earnings, the earning report, and after this it could be still, or in addition to that, quite a nice boost for the stock and also for the price. The debit ratio, and that's also very nice under these circumstances, that the company has a wonderful debit ratio, because they don't have any debit last quarter, and divided by the equity last quarter we received 0, so we are above 0.5, so they don't have any, we don't have any risk in terms of the debit. So the debit ratio, yeah, less than 1 indicates a low debit, while a debit greater than 2 indicates a possible risk for debit. But in this case, quite a nice situation of this company. So the PEG, I love this KPI because the PEG is one of the most important key figure for the assessment of an already profitable growth stock, and it calculates the ratio of the price per earnings ratio and the profit growth. And if the ratio is between 0 and 1, this indicates an undervaluation of a company. And here we have an PE ratio trading 12 months. You can see also here in the screenshot of around about 42-43 divided by around about 100% profit growth trailing 12 months, so we end up at 0.43. In addition to that, 3 points, and here you can see the last earning reports. Q4 2019, Q1 2020, they meet the expectation of the market. They missed in Q2 the EPS, and Q3 is this week. They will present the final figures, and hopefully they will meet the 0.6. Maybe they overachieve it. Let's see. That's quite interesting. And after this release, I think it could be quite a nice boost in terms of the price, so they can pump up directly after reporting. But if they miss the expectation, then they will be in consolidation. But after finalizing the consolidation, I think it's a great opportunity to get into the stock. So finally, as I mentioned, here you can see the maximum high growth that we can achieve, 18 points. The result for CO-DIAGNOSTICS, 14 points. So quite a nice high growth value for this company, 14 out of 18. And if we take a look into the EPS trend, so the estimation, the current one for this fiscal year is 1.83, and for the next fiscal year 2.61. So we talk about a profit growth estimation of around about 43%. And the big question that I try to answer always for stock is, what is the fair price? So here we have 43%. If we compare EPS 20 to 21 as an estimation. If we take a look into 2017, 18, 19, 20, 21, and we take the average of the profit growth, then we have an average of around about 129%. And we can do two exercises. If we ask about the fair value by Peter Lunch, so the formula is EPS multiplied by the profit growth. So if we take the expected EPS of 2.61 for the next fiscal year, multiply it by the profit growth between 20 and 21, we end up at 112. So that means we could multiply our current invest by 7.5. So that's quite a very exciting opportunity for each of us. And yeah, let's wait until the release of the Q3 figures, and yeah, then hopefully we see if they will be in consolidation. After consolidation, still a nice attractive stock from my point of view to get into. Otherwise, if they provide us a very nice result of Q3, then it's time to invest from my point of view. So yeah, I hope you enjoyed the video. Please feel free to hit the subscribe button below, become part of the Monkey Stock Club family. So that helps me to establish a nice community here on YouTube. Also like the video, so that helps the algorithm to let me increase my videos here. And yeah, I wish everybody a nice day, and hopefully we will see each other again. Bye bye.